Can you track market maker positions? Well, turns out maybe actually you can. And that's what the inventory cost basis is all about. And today I'm going to go into detail about how I am calculating these values and how I use it. But before I get into all that, I just want to show you what it looks like, because this is just really impressive when you can see this on a chart. I myself was very skeptical of this idea when I first found it, and I'm still doing some empirical research with it, with some pretty impressive first results. This is just really cutting edge stuff that we don't fully understand yet. Still, it's just uncanny how accurate this thing seems to be. Nothing else I've seen comes even close. It's easy to fall into like confirmation bias with this sort of thing. On this indicator, you will see hard bounces to the tick off of these lines during the most active hours of the market pretty much every day. And you can see several locations here where market hard bounced off of the lines that we're getting from the inventory cost basis indicator. So what is this doing? Well, just think about how things work for a large market maker providing the majority of the liquidity to the markets. The market maker will place limit orders, and when those orders are filled, the market maker is taking on inventory. Now, along the way, they're going to pick up that inventory at multiple different places. They're also going to take profits at different places. So based on where they were filled, we can determine what the average price, aka cost basis, the market maker paid for their current inventory. And that's what these main lines, the solid orange and solid blue lines, are on the chart. And the way that we calculate this is by modeling best and worst case scenarios based on the volume seen in the market. One scenario where the market maker is only adding long inventory, and one scenario where they only add short inventory. So the solid blue line is the cost basis for a long only market maker, and the orange line is the cost basis for a short only market maker. Now, the model also attempts to model profit-taking scenarios. So it assumes that the market maker will always take the chance to close out inventory at a profit, even if it's just one tick. So then we get theoretical break-even points where the market maker is for sure losing money, and that is the dotted lines like this dotted blue line down here where we bounced. So of course the market is much more complicated than this naive model. There's not one market maker responsible for all fills, and the market maker doesn't necessarily always take profits in the way that this model assumes, but the model is just mapping out the best and worst case scenarios. The truth is somewhere in between, but it turns out that these extreme scenarios can be incredibly useful. So how do we trade with it? Well, I just want to start first by pointing out that the indicator is going to be the most useful in scenarios where the market maker is really in control of the market. So situations where there's not a very strong trend that day, or the trend is already over. In those scenarios, the market seems to have a strong tendency to come back towards the cost basis lines in the middle and then hard bounce off of them. This makes these lines extremely effective profit-taking targets. In such a market, it is also very difficult for price to stay above or below the dotted lines, so you often see hard bounces there as well. You've got to be careful though, because if we do have large players in the market or there's a trend, then the market tends to just ram past those dotted lines, and often they will do it over and over again as though they're constantly stopping everyone out as the market continues to push. So again, it's very important to know what type of market you're in. This model is good at helping to explain endogenous moves caused by people's existing position. It's a completely different situation when new money is coming into the market. So to determine which mode we will be in that day, you have to know what's going on in the market with news and so forth. So here is a great example. On this chart, the next day was a Federal Reserve meeting. So nobody was really looking to make moves in the Treasury market. And you can kind of see that they just kind of hug that cost basis line and trade back and forth between them. I also want to warn you if you have any ideas about how this works based on those price action traders out there that claim to know the algorithm that controls the markets. I hope you can already see how this is a little bit different. We have to look at volume and figure out whether the market orders are buy or sell. In order to figure all of this stuff out, you need market depth information to do that. You just can't get it to the same place with price patterns. In general, I don't find that the behavior of the market in relation to these models really match the theories of price action traders very well at all. In general, the market maker is really just trying to make money from the spread based on current conditions and are adjusting to the order flows that are coming in that day. They're not specifically targeting retail or anything like that, even if these dynamics can result in endogenous moves. And so here's an example here where I think a lot of price action traders would be saying, here's the liquidity grab and now it's going to reverse. And that's not really what happened. It did move lower throughout the day. Okay, so let's talk about some of the parameters of the indicator itself and the companion indicator. In most cases, you're going to want this cumulative and reset on session check. Cumulative basically determines whether or not the inventories reset at the end of each bar. So typically you want to have that unless you're really trying to take a really high level view, like a 30-minute bar, and you want to see what was going on just within that bar. Then you might want to turn cumulative off. Reset on session resets the inventory at the start of the session, which I would highly recommend because, as time goes on, there's going to be more noise in the market, more things going on. So the indicator starts to become less effective as the session wears on. You might have some situations where you want to compare things between sessions, but for most situations, you're going to want that reset on session turned on. And also note that it is the session template that decides when things reset. So for instance, the S&P 500, I really like to have a 3-session template so that I can have things start at the beginning of the extended session, but also restart at the beginning of the regular session. I also want to mention this caching section. This will save the data out to the file, and this is mostly so that you can do back tests later without needing to use tick replay. So if you're not planning on using that, you can just uncheck those properties and save some disk space. You'll also notice that there is a ton of hidden subplots. This is actually something I do a lot in my indicators. There are all sorts of interim calculations that we make that I've made available, and those data series are just transparent so that they don't show up on the main chart. And the reason that I do that is because these are going to be things like, how many contracts do they have on right now? So it's going to be a number in like the tens of thousands. And that is just going to completely screw up your price chart scale if you try and do it on the price chart. And unfortunately, NinjaTrader doesn't allow you to make an indicator that shows up both on the price chart and on a series underneath. And so that's why we have the companion indicator. So the companion indicator is kind of a hack, and what it does is it goes into the main cost basis indicator you already have on the chart and pulls all of those other data series out so that you can plot them on a separate subplot underneath. The default settings on the companion indicator will show you the inventory long and inventory short, which I find to be extremely useful. It can alert you to when the market makers are suddenly picking up or reducing their inventory. So if you're interested in trying this model out, you can download it for NinjaTrader 8 at my website, speculatorseth.com. And remember that while this is a paid indicator suite, you get a free 2-week trial. I want you to be able to put this on the chart, try it, see that it's benefiting your trading. Try it for 2 weeks before you actually purchase it. And then when you purchase, it's just a one-time purchase for a lifetime license. And a large part of what you get with the indicator package is access to me. You can ask me any questions that you have about it or how it might apply in a particular situation. You want some changes or new features, or heck, you want a completely new indicator. Let's talk about it. That's one of the big benefits that I can provide, is that I am more available than other developers might be able to be. So I think you guys will really enjoy both the cost basis indicator and the other indicators that I have in the suite. I will see you guys when I'm streaming every morning at 8:30 Eastern time. In the meantime, stay excellent, team.